Good morning, everybody. It's Chris here from Student Education with the 4 Majors Analysis Update for the 29th of September. Welcome. Just going to be going over the 4 majors this morning, starting with Euro against US dollar on our strategy template, CTC. Apologies. Just going to be starting with the daily, in particular. Very interesting this. I was speaking to a number of our students last night on the blog, just before Bernanke kicked off his speech at 10 p.m. GMT last night. And everything looked favorable for further downside. We have this shooting star pattern clearly after a number of days of upside and failing to break a prior swing quite convincingly. Really thought that we could see potential for downside, and funny enough we saw it running through the Asian market session. So be it. CTC on a daily is still negative, however. We are going to a consolidation period now. You can see there's a definite slowdown, a lot more pauses along the way compared to the initial huge moves that we saw without any consolidation on its way down. So intraday, let's have a look. Yeah, I mean, you look at the previous 4 hours leading up to last night's trading session, you could see quite clearly a number of shooting stars. 1, 2, 3 dojis, and this bearish engulfing of here really had me going, to be honest with you. Swing highs, a lot of swing highs going to the period, and then a bearish engulfing to the downside, breaking below the prior swing. It really had me going. So definite had all the telltale signs of bearishness. This is the only chart, however, that was giving us a buy signal still on the CTC, even though it wasn't a clear buy signal, because the blue, we had red on the other side. So indecision. Ideally we wanted to wait for the next candle, or the candle to come red. There again we had indecision. Excuse me. And yeah, so going forward we wanted to see that break, and then obviously if a clear failure at the 1350-500 would have been a clear indication that we're going to see further downside movement, and that didn't stack up. We had this massive up candle, so we had bearish indecision after that bearish engulfing, leading into the Asian market open at 1 this morning, and upside prevailed, really engulfing all of this, and we're now back at a prior resistance level. So hesitation yet again, and we've seen the Asian market hand over to the European session. We're starting to see slight bearishness creeping in. Ideally, if this is to continue upside, then we'll more than likely love to see it break above this candle, this bullish up candle, but by doing so, then we're definitely clearing out all this indecision that we've seen here at a resistance level. Very important. We've failed to see price really materialize after testing the 50-period moving average. And if we are to see anything really materialize from this pair, we do need to see that this candle really higher, because we are going into this, we are fighting this consolidation band now. But yes, everything was pointing for lower swings, and in actual fact, my entry level was the prior low of this, and sure enough, it actually came back and bit me. But that's part of trading. You know, I didn't break any of the rules. So good for that. You know, it's good because, you know, we cannot dictate what the market's likely to do, but all I can do is obviously do my analysis and wait for those potential setups to present themselves, and I'll trade them, primarily because of my fundamentals. Sorry, my technicals on the chart are giving me the heads up for that. And then you win some, you lose some. It's part of trading, unfortunately, and it keeps us all in check. So yep, great. So what we are seeing now is the CTC going blue again on the hourly, but now we're testing the underside of this trend line to the upside, and we are forming this lower swing. It looks like it, which happens to be smaller than the previous, lower than the previous swing. So still consolidation against that upside resistance as I mentioned. So a lot of mixed signals now. Blue on the small time frames. In actual fact, yeah, here again, yeah, it's two larger ones, a daily and 4 hour, that just don't stack up. However, hourly, 30, 15 and 5 are all looking positive. Okay, even though I don't know why, it just looks really, really negative, personally. But that's it. You've got to trade what's on the chart, and sure enough, let's go with it. So look for potential further upside movement if price can stay above those levels. You look on a 5 minutes, for example. We had a price swing, noticeable resistance support at roughly the 13, 605, 610 area. So if price can stay above those areas, then obviously what we could do is see a bounce higher. We'd like to see a break and close higher than the previous swing, or high in this case, that we saw just before 5 a.m. GMT this morning. Break higher than that would obviously see price rally. We want to be trading above that bandwidth, as I mentioned. At the moment now, we are still pretty much, if you look at it, trading lower than the previous swing, and ideally, as I mentioned, if we can get above that 13,6,500 in particular. So if you just use 13,6,500 as a stop measure as to where price really needs to be above, then great. Otherwise, what we're going to see is this bearish sentiment still keeping, because those previous highs, the new high that was forming now is still lower than those. So we want to be above 1365 to definitely give us a confirmation upside. Otherwise, we're still looking bearish consolidative at the moment, even though there's a bounce. Next up is the sterling against US dollar. Good old cable. Here again, similar to what its counterpart has done. We've seen price really pull back, but only as far as a price support in this case here at the 15,700 attempt 2 days prior. Yesterday's candle bearish engulfing, almost like a bearish Harami pattern at a resistance level. It fails to break above that. We need to be trading above 1570 to see any further progression. Otherwise, we're seeing consolidative against the major trend in this case, which is still negative. So got to see a break higher than 1570. Otherwise, we're just looking for consolidation. Even then, if you can see there's a noticeable 1-2 resistance level, even on the actual bodies of this at 15,6,500. So let's look at that as a potential resistance level for this pair. 15,6,500. Got to be trading above that. Failure to see price trading above the 15,6,500 will mean that we're still looking bearish on this consolidative. So what have we got here? Excuse me. There we go. Notice all those little wicks here. Very wicky. Resistance. Clear indication of that shooting star, spinning top, spinning top, spinning top, spinning top, bearish engulfing. Here's another one that pretty much caught us. I was looking at this and thinking, geez, like there's a lot of resistance here. I am still in this trade, funny enough. This bearish break here, and my stop is above these prior wicks here, just below the 15,700 mark. So still in this one, guys. To the downside, it still looks bearish to me. I don't know, even though we are seeing bullishness creeping up, but even the charts are not saying the same. So I'm still low on this one, in a negative, obviously, but hopefully my stop will take care of it. And you can see 30 minutes, the highs are getting lower. Okay, even though we are seeing consolidation to the upside, the highs are getting lower. Prior high, the new high that's forming now is still lower than the previous one, which happens to be lower than the previous one. So, wasn't it? Now I'm against it, but my stop is above 15,700, and as long as it's above those areas, then great. I'm still following the rules of my trading pattern, which happens to be that if there's an entry, then I'm looking at the price swing, which happens to be this very strong resistance level here at the 15,700 as my stop area. So as things stand, we are seeing consolidation, upside movement on this pair. We've had a sharp rally to the upside during the Asian market session, and we've seen a pullback now going into the European session open. The reason why I keep thinking there's still bearishness in these is primarily because the fundamentals just over there just don't stack up for all this momentum. is just risk averse at the moment now, where we're seeing all these moves happening, but it just not stacks up. And we have a lot of news coming out during the course of today. German unemployment change. We have lending individual month-on-month figures, which can't all be that good. Unemployment change, they're expecting 1,000 less or more than the previous figure. So that's all going to be stacking up. And then it just ties in with everything that's happening in the States, not States, the Eurozone. So that's my feel on things. We are trading the rules of CTC, and over here you can see that the 5, 15, 30, and the hourly are all blue. 4-hour is blue, but the CTC isn't, and we're still trading negative. So this is the thing, though. You got to say to yourself, great, if the price is still looking to be bullish, and I'm looking for something to go long, then ideally I want to be trading about 15,700. Until it does exactly that, then I'm still looking bearish on this pair. So we're seeing a bearish consolidation here on the 4-hour in particular. If you look at the trend direction for this pair, clear breakout, yeah, not a problem, but breakout, and now it needs to get above the one area now, this prior resistance supporter, before we see any further. We see at least 15,700 is our first potential target. Nice break, a lot of movement between the next one, which is just below 15,900, as we head up towards the 1600, which is psychologically, we know, on a sterling, a very strong support and resistance on a daily time frame. So get above 1570, then yes, we could look for potential further upside movement. Until then, we're seeing a lot of resistance here on a 4-hour. It's got to make sense. This 1, 2, 3, 4, 5, 6, 7 candles, 7 hours. So that's what 7 4 is 20. A lot of resistance at this level. So it needs to do a lot of work to get back up here again. Until it's doing so, I'm still looking for bearish downside. Next up is US dollar Swiss franc Swissy. Let's have a look at the daily. We've had slight progression. We've had pullbacks ever since we tested this 89.90 area prior resistance here, going to consolidated band here. You can see quite clearly that there's a prior support and resistance level around about the 92, 92.50 mark, as price has definitely taken a breather. As we've headed higher, price has definitely started to give us a little exhaustion wicks, more price action at the bottom of the trading range, and failing to break and close higher. So definitely a ceiling level there, and we've seen price pull back on these shooting star patterns. So we're likely? Well, as long as it's trading above the institution moving average on a daily, we're still looking for positive upside movements. We are just seeing a correlation against the major trend. We have seen a price support and resistance level here at the 89.90 or 8900 mark, and as long as it can stay above that, psychologically, for the the intraday stuff, then fantastic. So let's look at the 8900 mark as a intraday support. So let's look for 89,900. There we go. That's the one. So it's still a long way away. Now clear bounces in between that. There we go. If we're going, yeah, clearly wanted the 89,300 mark, and you can see that there are lower swings going into this. We had a slight break above the previous swing in this case, so definite idea that we can see. As long as price is above this 89.3 mark, then we should still be looking for potential upside movement on this pair, because it's still trading above the major resistance on a daily. So institution moving average in play now, and we zoom out, you can see a clear consolidation now for this pair. But upside moving, a breakout, fake out here, you can see quite clearly. But nonetheless, still, if we can look at the 89.30 mark as a intraday support, and as long as it can stay above that, then fantastic. If it breaks below that, then we should be looking for further downside movement on this pair. Last pair of the day is the US dollar Japanese yen, and we've seen some pullbacks occurring. A lot of movement to the upside yesterday, but failing to break higher than the previous day high. and we've seen this little consolidation here, and the Asian market is really open lower going into European session, handing over to the European session. So we definitely see a support and resistance level at the 76.10 mark, thereabouts. And there's still highs going into this. 76.50. If I can find it, it would be great. We know there's also a prior support on bodies, and so you can see it's really in the consolidation range now. Swinging high yesterday, but falling over yet again. Noticeable support here. Then this candle over here, this bullish engulfing here, really forming that other swing, and price is testing that swing area now. So CTC is still negative consolidation. Our 4 hour still hasn't come up yet, but you can see on our hourly, you can see quite clearly that we've had a support area, and you can see those swing highs. So swing high, swing high, swing high, swing high. So it's swinging higher, and moving average is all below price. So is that an indication that we could see potential higher swings? Ideally, we want to be breaking above this prior one here, that's 76.60. That's our last high, still lower than, so it needs to break above that in order to break this negative downtrend. And until such time it does that, then we could look ultimately at 76.90 as a potential target intraday for this pair. CTC is blue for this time frame here on the hourly, and we look at the 30-minute, exactly the same, and the 15 minutes also giving us a bar signal, but ideally we want to be trading above a prior ceiling level here at 76.60. So break above that, and we should get an opportunity for further upside movement. Otherwise, we could just see price failing here yet again, because it's done so in the past, and for a reattempt to the low side, because we're looking negative on a daily. So factor that into your guys trading. Make sure if you are using the CTC to please back it up with sound money management rules, and most importantly, keep it simple. Okay, I'd just like to let you guys know that euro and sterling, I'm in those, but I'm trading in a negative at the moment because you see major pullbacks. I initially got into them because the signals late last night were looking bearish, and the CTC was in my favor on all the small time frames. So I am actively in that trade. It is against me. I don't, I'm not going to lie to you. It happens, but I'm following the rules of the trade. I'm following the rules that I've put down, and I'm not going to be right 100% of the time. If I was that, then I think Mr. Buffett would be the one knocking on my door every morning telling me what we can expect for the day. So yeah, we are traders, we are human, and we're going to have losses along the way. So my stops are in place. They haven't been triggered yet, and I'll let them play out now. I've got to stick to the rules, trading, and you guys need to do likewise. Okay, so if you are trading the CTC, trade them for what you see on the chart. Okay, have a fantastic day, guys. I know the weather's going to be great again today, so if you are doing some trading this morning, get it done. Take your pips when they present themselves, and go out there and enjoy some time in the sun. We're not going to see a lot of it for too soon, for too long. So yeah, enjoy your day, and most importantly, trade serenely.